Hello, how are you? Hopefully you are doing fine. And today in today's video, we will cover the Manulife. Manulife, the ticker is MFC.TO. This is for Canada, and US is this is also listed as MFC under the ticker name MFC. This is the reason for why I am doing this. This is still a beaten down stock, so the company, the market value is still uh, as compared to the book value, the company is still under the 30% discount, right? So, and then this company has a big long history, so price is still way low, and I confirm with the model that the price which I will share with you, that yeah, that's correct. So that's the price is low. And then I thought, okay, let's do the video on this one to see the finance, to whether it really makes sense to have as an investment or not. And it's pretty it's and I'm let's see how it goes. And I analyze a couple of factors from financials and dividends and overall, and just give the idea to you. So for sure I'll cover the different the snapshots and to make the opinion. Okay, so let's get started. Yeah. So as I mentioned, the ticker in Canada is MFC.TO, and in is US is under MFC. Okay, this is the Manulife, and the business is the insurance business, and they have the ETFs and all other stuffs as well. And it's a global business. It's not only in US and Canada, but it's also in Asia and other. That's what I will see in the revenue diversifications from that, right? And it's pretty well-known company at least in Canada, and it's 25 billion the market cap. So it's not a small insurance company we are talking about. Okay, so the dividend, it's a pretty stable dividend, and when I did the earlier video, I have shown the history of dividend as well. So that's why in this video I didn't cover that. So 5.6 honestly is a very good dividend. So that's one check mark. Price is under $20, right? So most of the people comes to me, okay, you do the stocks which is over 100, 400, 200 and those dollars, but do you have any stocks which is lower than that? Look at here. So we still have our this company, insurance company, which is giving 5% return back dividend yield, and it's only under $20. So that's a bonus. And 5-year annual growth rate is 8.82, which is as plus as well. But the main thing, what is still the market value is 30% lower than the book value, right? So this means it's a really value stocks. We are getting something very cheaper. Okay, so let's see something more. And before I go further, let me introduce to the myself to the new YouTubers. If you're new to my channel, myself Pramod Kumar, I'm a CFA charter holder, and my website is riseanalytics.ca as mentioned here. So in my channel, mostly I'll go very deep down analysis of the stocks, covering risk factors and mostly from the fundamentals and economic perspective, and try to make an opinion on the stocks. So I did most of the stock from technology, cruise industries, and have some basic video on my channels. Please do check it out if you are new, other videos, and give a thumbs up. Either you are new or my existing subscribers. Okay, and if you like it, please do subscribe as well. Okay, so let's get started. So let's check. So this is a nice slide. I got it. So basically in this one, it's give the very big lot of content in one. So what is, so if you see the core earning from 5 years, it's pretty much double from 5 years, right? So the business is doing very well from the core earning perspective, grew 5%, right, from 2018. So it's now is double digit in Asia. So 3.44 and 5 and 6, right? So 6. The net incomes to the shareholders, again it's over double, right? So high. It's not like just giving the dividend only. And from the dividend perspective, sorry, before I jump to the dividend, let's the net income. So net incomes company is increasing as well, right? From the dividend perspective, it's over $1 per share, and right, and you see the dividend from 2015, it's growing. So that's the key, right? Why such a company can grow the dividend consistently? Because for sure they are solid business, they can have a strong earning. So that's what it's all about. Okay, so that's, they have some asset under management, but we don't go that deep. So but this one, basically on this side, I want to more cover as well. Okay, so if I want to cover from the operating cash flow to the debt, look at the debt ratio, right? So their debt ratio, this is the total debt, annual debt, and this is annual operating cash flow, right? So this is from 15 billion and 3.2 billion 2020, and this is to 2012. Look at the cash flow. This is a big, very big range. The operating cash flow is so huge, and this is the debt is so low, right? So this means, because what they are basically doing, right, they don't need much debt, they are collecting all those premium, right, from, so this means they are very good in terms of selling the insurance uh, to the people who are very strong, who are not defaulting that much, and just collecting the premium with low probability of defaults, and also, and but it's saying that they don't have much debt in their books, so that's a very good sign. If I compare with the operating cash flow with their net income, so look at the cash, right? So the cash is higher as well, so that's pretty nice, and the net income is also growing, right? So this is the cash. Now this is their financial statements. So what we see here, this is the quarterly, first quarter, because of the coronavirus impact as compared to the last 2019 first quarter. We do see there is the income falls here, right? So around almost $1 billion income, because these are in millions. So 2.1 to 1.2 billion. The core earning is that's why the core earning is dropped, right, around 500 million, almost 500, little for 500 millions. So their earning per common share is down, and the core return on the earning is down as well. But that's pretty much expected, right? Because most of the stocks is beaten by, and then the all other side. So in the Asia business is, it's, if you see the performance as a business value, it's lower, but in Canada they did well, right? Maybe, right? So that's good. In US it's down as well. So, and we see there are others, so we'll cover in the other slide as well how their business is doing. But for this is just for this quarter, right? One quarter. So right, so that's the latest one what we get. Efficiency ratios, expense efficiency ratio, the higher is better, so this is doing well. Okay, now we look into the profitability. So if I just move aside the impact of because the business is down, and most of the insurance companies, and here at least in Canada, right, government ask to stop collecting, and people are not paying the premium for the car insurance and all. But for the home insurance, for example, we still have to pay because there is less mobility, right? But now the business is opening up, so I expect the second quarter is better. And we have seen no government can lock down people for that long, right? They cannot just print the money. That's a different section. So, but the money need to be flowing through, so they can collect the premium back. And once it's done, I'll see the spike, and that's why even the share price is going up. I see some green signals there. But let's look into here, right? From the profitability perspective, the year over year, because we are looking for the investor as a long-term perspective. Look at the return on equity first, right? I want your attention here. It's over double, my God, from 5% to 12.2%, right? So look at that. There, it's clearly reflected there. But if you see the net earning or earning per share, it's more than double, right? It's only less shy from $1, and is close to $3. So the company is doing pretty good from the finance perspective. Okay, so if I see the same thing from earlier, I honestly, before I looked into it, I didn't know that this company has a global presence. I thought it's just a Canadian small, just maybe Canadian company. But when I was looking into the, hopefully I didn't hide these slides. No, that's okay. Okay, that's great. Okay. Uh, so yeah, so this is the earning diversification, right? So when I was looking into the some stocks which is beaten down by, so I can do some investment, or at least I find, and this Manulife, I said, okay, let's me check this and makes some series of videos. If I find something good which is a global brand and has some good solid finance as well, so try to share, right, to the community, investor community here. So here we see the Asia, Canada, and US, right? So in the US market, for sure, this is showing 2018 to 2019 the core earning by this regions, and this is the percentage change. In the US, it's in the Asia market. Look at it, right? It's increased by 11%. So that's a huge market in terms of the populations, right? So I'm seeing from that angle. If they continue to grow 11, so this means it's good to the bottom line. In the US market is it's still increasing 2%, but in the Canada market doesn't have that much population, but and it's reduced, right? The revenue is reduced. But overall, we see the growth of 5%. Okay, so if I see now uh, before okay, so before this, and this is the financial strength, right? So all these under the Manulife umbrella, all these different insurance, and these are their business line, right? Companies, right? Singapore, blah blah. So these are the rating agencies, right? So they rate their financial strength everywhere. We see the A minus. So this is very good. This is very good in terms of the rating, right? Anything beyond below S&P triple B or below is a junk, right? That we don't touch. But this is a very good indicator. This is not from the one, but all, pretty much all top four is, these are the best, at least in the US, right? S&P, Moody's, and Fitch, and DBRS, right? I'm not very familiar with AM, the best, but still it's good. Okay, let me show you the price check as well. Hi. So here now I'm showing the basically taken the free cash flow model and then discounted. So I have taken my discount rate 10.05, 10.50 percent, 10.50%, and the growth rate I have took very small because of the, this is just the copy I have put, right? The growth rate I have taken very small, right? So let me just zoom it so you can see only 2.7% for first few years, and then remaining I expect it goes with the economy, because the insurance industry, the margins are less, and I don't expect that to be higher growth, and I want to be very conservative as well, right? uh, Based on the scenarios and overall, right, just in general. So that's what it is. When I do this, I come up with the per share price, and this is on the Canadian, so the $27.53, right, which is, we can easily see. And if I go to the Yahoo Finance and see, now I'm on the Yahoo Finance website, and I already take this the chart. This is in Canadian, but you can type MFC only, and you get the US the chart as well. The stock right now is actually is $19.14, and we expect, based on our model, around $27. And if you notice, this is exactly the same where it was before, right? When the crash happened, and then it suddenly goes down from to 13, and from 13 it comes up to 20, and then flowing 19. And the reason of it jumps, you see, is jumping because of the market is opening up, right? And I can see in near time soon it will come back to Israeli. So this is the and if we can we see that the stock does pretty consistently, right? And then it gave a dividend, which I already have shown to you. So so that's what, and it is not very expensive as well, right? It's $19-20 and consistent 5% over 5% yield. This is the best, right? So let's continue. So just want to, and even it's the, if you see these price over earning is only single digit, $8, right? So it's not very expensive as compared to the other high growth stocks, or you name it, it's crazy, 30, 100, 200. It's just single digit, and it's giving $2.33 even back per share, right? So you can reduce that further from 19, so even it's further discount. Okay, so yeah, so that's it from me. I don't want to, I try to summarize, the condense the information and try to give you in the slides as much as diluted and easy format. And some of the stocks really we need to go very deep, but this is already beaten down and has a long good value, so didn't have to spend too much time to see all other elements. So 30% down, and a good dividend and other yields. So let me know what you think, and if you like this video, give a thumbs up please, so more and more people will like it. And if you want, if you already own this, or you like any other this kind of a dividend stocks or any other growth stock, please put in the comments and I'll try to make a video on it. I'm planning to put something more like similar, which is beaten down and has a good fundamental. I do find something as well which is beaten but doesn't have a strong fundamental, and even the global brand, I ignored that. So but I'll see if I find something interesting and put it there. So please give a thumbs up and subscribe, and see you soon in the next video. Bye for now.